Hey there, the ball dropped and rates went higher. Check me out. We're going to talk about those interest rates and how high we expect them to go in 2022 right after this. Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And first, we're going to talk about those interest rates. So I'm going to put up here the average 30-year fixed according to Freddie Mac. Now, that is considerably higher than the last video that I did just a few short 2 weeks ago. And in the opening, I mentioned the ball dropped and rates went higher. If you blinked, if you said, hey, I want to buy a house in 2022, you weren't able to find one in 21. If you've blinked, I'm going to guess the rate is higher than your expectation from before. And you should expect that. So rip that Band-Aid off. There's no more 2%, 30-year fix and things like that. As I said, you can check out the link below to the average 30-year fix according to Freddie Mac. Check out the chart. Look at the 1 year. Look at the last 6 weeks. If you follow the 10-year, if you're a investor and maybe follow some of these pieces, that's considerably higher over the last 2 weeks, and specifically since January 1st, we've seen rates move higher. So now that we've ripped that Band-Aid off and we know that we're going to see higher rates, maybe in the mid threes, maybe in the high threes, maybe even touching 4 at some point in the first quarter. Well, time will tell. One thing I do want you to consider is that in a market where we see rates increasing, it is so incredibly important to understand what points are. What points are is basically 1 point is 1% of the loan amount. And people will absolutely positively, and especially those advertisements out there, they will quote points. They will say, hey, with 1 point. If you check out, I'll put it up here again, is the average 30-year fix according to Freddie Mac will always quote with like 0.6 points, 0.7 points. So if you had a $100,000 loan and you had 0.7 points, that means you have to pay $700 to get that specific rate. Now, I'm going to give you an analogy here today for points. So I'm a big golfer, got my dad's golf clubs behind me. I've played golf all my life. Golf uses a golf handicap system so that two people at different ability levels can go out and enjoy the same game at roughly, what would be kind of par for the course or standard. So if I'm, say, a 3 handicap, meaning that I, average about 3 over par, and golfers, I know that there's more to it than that. And I've got a friend that just is getting started. He's a 21 handicap. Well, I've got to give him 18 strokes. Well, points are a lot like that. What we're trying to do is equate to a center line, to a balance where both of us are on an even playing field. Now, if I gave you 3% with 1 point, right? And I'm going to take you onto the whiteboard here and kind of show you. If I've got 3% at 1 point with a loan amount of $500,000, that means that you would be paying $5,000 to get to that 3% rate. Or I could offer you 3.5% and have a different payment, but not charge you. Okay. On the flip side of that, I could say, here's 4% interest rate, and then I'm going to give you $5,000 back. And what we're trying to do is bring it all back in to a balance where these different rates can equate to a specific monetary value. So the reason I'm bringing this up in the start of 2022 is that as rates are going up, and we're likely going to see that trend continue, this is our last chance to lock in these absolutely low 50-year rates, right? We're not at the absolute low as we saw about 1 year ago, but we are very, very, very close to that. So a lot of times in an interest rate market where they're moving up, points can be a very, very good thing. When you have rates moving down, paying to get a rate lower that potentially you may see for free later is likely not the best representation, or not the best kind of dollar for dollar investment into that mortgage loan. Because as soon as you refinance it, or as soon as you sell the property, then the money that you baked into that is likely going to be gone. So those are points. This is the first video for the Mortgage Minute in 2022, and unfortunately delivering the news that we do see higher rates and the trend will likely continue. So check out the video I did at the end of 21 on where we're going to see the overall market. Thank you so much for tuning in, and we'll see each other again very, very soon.